Welcome to Drill Down Earnings. We have quarterly results out from Microsoft. This is a business story behind one stock on a move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We cover the 50 most important companies in technology. Yeah, shocker, Microsoft is one of those. Earnings for what they call their second quarter here was better than Wall Street expected, for whatever that's worth. Their sales were up 13% to $70.1 billion. Adjusted profits at $3.46. That's a little bit better than Wall Street's expectations, but that really tells you more about Wall Street, less about Microsoft. Let's dig into the business here, not just the miss or the beat. What the business did, the actual numbers here, again, $70.1 billion, 13% increase on one of the largest businesses ever created by mankind. Really impressive growth for this company. Profits of $25.8 billion, up 18%. So profits growing even faster than the top line. What's driving that? Cloud and AI. Satya Nadella, the CEO, calling that out in the conference call over and over again about how their customers want to use their AI, and we'll see about that. But they certainly want to use their cloud services. I'm going to show you that because their Microsoft Azure business really drove this quarter here. So the 13% revenue growth is good, and the revenue growth rates have been much stronger in the last year and a half than they had been previously. And if you look beyond their headline numbers, you see that they're talking about demand from Abercrombie, from Coca-Cola, from ServiceNow, all on Azure, and cloud customers coming to them wanting to use, in particular, VMware, SAP, and Oracle workloads, all on the Azure cloud. They're trying to distinguish themselves, of course, from AWS and Amazon's offerings, and they're doing that on the back of fantastic profitability, 35% profit margins, super strong for this company. And the cloud growth rate, it was really strong, but it did kind of flatten out here. So the cloud business is getting bigger and bigger, growing at double digits, but flattening out. The growth rate's been kind of steady for a year and a half, but it's an increasingly important business overall for Microsoft. Yes, productivity, Microsoft Office and Windows still very important to them, but really this intelligent cloud business is so important. And again, seeing 21% growth. If you think their overall business grew at 13% and the cloud grew at 21%, it shows you how successful this has been. The market liked these numbers when the stock, when they reported these numbers, the stock was up 5% in after-hours trading, putting it exactly flat, doing nothing for the last 12 months. The S&P 500, after all the pain of the last few weeks, months even, is up only 11% in the last year, but this Microsoft stock literally right at zero for the year in terms of performance. One surprise or shocker to me was the capital expenditures in this company actually went down in the quarter. On the conference call, Amy Hood, the CFO, talked about how it was really about the timing of some leases for data centers, and that we can still expect that number to increase. But to be down just a little bit is, a good thing for people that were concerned about Microsoft's cash. They have so much cash, I don't know why anyone would be really concerned. But the notion that they were willing to just not go pedal to the metal on all this AI spending and data center spending. And yeah, when these leases didn't come through, they didn't find other ways to spend it. CapEx down 5%, taking a breather here. And when asked about it on the conference call, Satya Nadella had some really interesting ideas about the difference between the hosting business, which is just renting out data center space, and the hyperscale business, which is AI and a lot of the uses of Microsoft Azure. Here's what he had to say.
I think the way to think about this is, you can ask the question, what's the difference between a hosting business and a hyperscale business? It's software. That's, I think, the gist of it. Yes, for sure, it's a capital-intensive business, but capital efficiency comes from that system-wide software optimization. And that's what, makes the hyperscale business attractive, and that's what we want to just keep executing super well on.
So there you have it from Satya Nadella. But what's it all mean? What's the drill down earnings bite? The one number that tells you a whole lot. How should we understand these earnings from Microsoft? Well, third quarter results from Microsoft. Let's take a look. Q3 results from Microsoft. This is the business story behind the stock and move. The essential summary here is that it was a strong quarter, $70.1 billion, up 13%, really getting a lift from Microsoft Azure. And the thing that really drove that was the cloud business. And I told you the drill down earnings bite, the one number tells a whole lot. That cloud business grew at 21%. That's your business. Your number to remember, because they're drawing lots of big customers like BMW, like Abercrombie, who are moving more and more of their business, like Coca-Cola, moving more and more of their business to Microsoft's cloud, to Azure. That's really driving these results here. AI is happening, but Microsoft Azure happening right now. Really strong results from Microsoft. All right, thanks for checking out Drill Down Earnings. Please subscribe and continue to follow us. Follow us on the socials on X, on TikTok, and Instagram, and of course on YouTube. And you can follow me on X at Cory TV. Thanks for checking us out.